Good morning, everyone, and welcome to the Creative Birth Strategy Podcast and House here on Clubhouse. So we'll get started here in just a few minutes. Let me get myself situated here. I always have to do the little adds and subtractions here. My name is Joe Scarice, founder and host of the Creative Birth Strategy House and Podcast, here every Saturday morning, 8 a.m., every Sunday morning, 9:30 a.m. We'll do a quick invite for people to come in. We're pretty much out there on all the social media buckets: Facebook Live, LinkedIn Live, YouTube Live. Um, we're on Apple, Spotify, Audible. We have our own website, obviously, creativebirthstrategies.com. And our goal always is education and hopefully providing some networking and some strategy for you to walk away with every Saturday and Sunday morning. Now, I'd like to always thank our sponsors, which we wouldn't be able to do this without them. I want to always thank Realty 411, our national publication that provides national events throughout the country on behalf of real estate professionals. We just finished up an event here in Philadelphia. The next big event will be in Los Angeles, um, and that's in October. But that they've been a great ally of ours in providing collaboration and having speaking opportunities for a lot of the clubhouse professionals. I'd like to thank MB Capital, our unsecured business line of credit uh, referral partner that provides unsecured business lines for investors. I'd like to thank Lendmark Capital, our asset-based lending group that provides asset-based lending, 30-year fixed money, offers fixed to rent, fixed to flip, multifamily acquisition or value add, new construction. And then I like to always thank Perkatech, Yardell Perkins, our social media strategist, and as I call him, the Oz behind the drape. He provides all the social media intricacies to this podcast. He's my partner on this podcast. We've been business associates for a decade now, and he's been a great colleague and friend to the room and to our colleagues. We always want to look out and thank him for just being part of this great growth process. And this morning, I think our discussion is another layer that we want to tackle. Developing a concrete plan to increase real estate investor revenue goal strategies. We're in a very interesting market right now. Inflation is not going away. I know our president said he came into the inflation at 9%. Good luck. It was only 1.2%. Now it is 9%. So I think he's a little off in mathematics, but we'll give him a little break, I guess, there for the 100th time. So the higher inflation expectations keep yield range bound, meaning we're going to see inflated rates in a very stagnant market probably over the next 24 to 36 months. So how do we develop this plan during this economic turmoil? So we'll dive into this over the next little bit. We try to keep it to 60 to 90 minutes, but I think the subject is actually very parallel to what's needed to discuss. How do you keep the lights on in our business as a real estate professional? So let's first go update you on some articles. I did write an article on this, and it is posted on LinkedIn and my Facebook. So if you're not connected with me on LinkedIn, please do so. It was just posted yesterday, the article. But some interesting news. Credit for builders tightens slightly, remains costly. So the cost of money on lines is still um, high. So and it's getting a little tighter, but there's still availability out there. You just got to be smart about it. I don't see banks running to do lines of credit on personal homes. I think they feel values are going to start receding a little bit or over time in certain markets. So I'd be very careful how you set up yourself with lines of credit, because I think it's going to be a slippery slope over the next uh, several years. Higher interest rates, construction costs are serious impediments for new multifamily development. This could impact our rental stock over the next 36 months. How this will kind of work itself through with all these announcements of malls bringing 14, 1,500 rental units to their space. How will that slow down or speed up inventory and how will that eventually impact? This is the thing. Nobody's really think about it. If everybody's renting and nobody's buying, how will the values of these homes be impacted over the next 5 years? Right? Nobody's thinking about that. If everybody's buying an investment property and not buying a home to buy, where will the values be? Because an investor tries to buy at discount. A home buyer is just trying to get into a home to live in. So if you have more investors buying than home buyers, what happens to the value in some of these markets, specifically the urban settings? So hotel occupancy this past quarter decreased. So hospitality is starting to see a little impact. I saw a really interesting article. What the effing point? With mortgage rates above 7%, home buyers are still getting outbid by all. Remember this. Investors are now going head to head with home buyers in a lot of these C plus B markets because they can end up renting it right back to the individual they outbidded. Market rents are very strong right now in the suburban settings, rural settings. Urban settings is still focusing more towards Section 8 than market rent. So very interesting articles I read through this morning. First, I'd just like to say hello to our moderators, and if anybody would like to come up, please, raise your hand, and like to get your input as well into our discussion this morning. Michael D'Angelo, good morning and welcome. How's everything going? How was your week?
Good morning, Joe. Yeah, it was a good week, very productive. I'm Michael D'Angelo. I'm with MB Capital Solutions. We help clients get unsecured lines of revolving business credit. We work with investors, small business owners. Typically, we're helping them get anywhere between 50 to 150K in the unsecured revolving business lines. It can be used as gap funding, so you can use it in conjunction with hard money, like a product like what Joe has for down payment, earnest money deposit, reserves, paying contractors, material costs, getting the rehab started before you get reimbursed on the first draw. So I appreciate you having me here, Joe, and looking forward to the conversation today.
So what's been, real quick, Michael, what's been the general consensus with a lot of the individuals that I've referred over this past week or two? What has been their thought with investing in real estate and revenue goal strategies for themselves?
I mean, the most immediate thing with the conversations that I'm having with them is they're trying to make sure that they have all the tools in their funding strategy toolbox filled. They think some changes may be coming down the line, so they want to make sure that they have their home equity lines of credit in place, and they want to make sure that they have their business lines of credit in place. That way, if there is a change in the market, they are prepared. They're liquid to go out there leveraging these funds to go do more deals. Or they want to make sure they have them in place in case some sort of changes do come down the road, and these types of products are really being offered.
Thank you, Michael. We'll dive back into this in a few minutes after we get Joseph's introduction. Hey, Joe, good morning and welcome. How's everything going with your week? Congratulations on your closings. But I know we talked last week at dinner, and a lot of people that are not in the investment space saw that you closed on your seventh or eighth property, and now all of a sudden they want to get off the sidelines and start investing. What are they saying? What are they thinking? Why all of a sudden, because you just popped that information up on Facebook, the light bulb went on? What's your thoughts to that?
Well, the funny part is I never put the number of rentals I had, right?
Yeah.
So when I posted, I would just post, hey, closed on another rental on the books. This time I posted closed on rental number 7. And I guess that was where people were like, oh, he actually is doing this. It's not just because people aren't keeping track of what goes on. So the phone calls start ringing because now you're kind of like a proven entity, if you will. And they're like, hey, and I'm an open book more than most, as some of you can tell on here. Hey, what do your numbers look like? What are you making? How are you investing? How much do you have at risk? And I start explaining everything to them. and it becomes interesting to them. But then always goes the factor, oh, well, if only I had, you know, the money to put down on a property. And it starts going into those types of conversations. But overall, I think people are becoming more invested, more interested, because they see someone who came from nothing, and they saw I built my portfolio slowly. I'm only doing it one a year. I'm not uh, I'm not by one of these Instagrammers by any means, showing off in front of a Ferrari or anything. I'm just the average guy, and I have 7 rentals. And it also goes into, a lot of people put a lot of money into real estate when they hear that you have 7 rentals, right? When they don't realize that you have a mortgage that has to be paid and all that other stuff that comes first. But they they start, the wealth meter starts going off in their minds. So that's what I think is happening.
Well, it's funny. You'll probably giggle about this. I see these panels popping up. How do you handle the tightening of the market, where there's less inventory? I don't know about you, Joe, but I have clients that are buying 2 to 3 properties a quarter. I have one client that's buying 5 properties a month. So, like, maybe those people should get off the panel and get their ass out on the street and start working instead of sitting there with a tissue box. I don't know. What's your thoughts to that?
Well, I mean, the deals are out there, right? You just have to work harder for them. It's not, I mean, but this is an old story, and because you've had to work for your deals over the past couple of years. This isn't like this issue just popped up this year, right? You wanted to talk about it. It all started in what, 2020, 2021? Yeah. So now we're what, 3-4 years into it? You should already figure out how to evaluate a deal, how to make a deal, how to create a deal, and do your numbers. And you're gonna have to put a lot more offers than you may have had to in the past to get the deal that you really want. I mean, we all know we make money when we buy, but you have to be very, very disciplined in your numbers. And yeah, is that going to lead to you having to walk away from some deals and being outbid? Absolutely. I mean, the media created a frenzy on housing. Everybody thinks there's a housing shortage. I don't think that there's a housing shortage. I actually think that we're going to wind up going into a rental surplus with all those rent-to-owns that are being built. And might go into a little bit of a rent issue in local areas like other markets have seen. So, I mean, listen, again, I'm also only looking for one a year.
I get it.
People are saying they can't find deals, haven't even done one in their lifetime.
Yeah.
So it is what it is, right?
Well, it's quite ironic. Somebody caught me on the drive home from work yesterday, and we're just shooting the crap on a call, and he's like, how are these guys getting these properties? I said, they're not. They're just talking about it online. Because I'm telling you, they if they're busy online talking about it, they're not busy making offers. Okay. And I gave him a homework assignment. This is a very qualified borrower, has a couple $100,000 in the bank, great credit, owns a couple property, like 4 or 5 properties, done a bunch, like 4 or 5 flips, bunch of rehabs, has the experience. He was like, how do I scale? I said, well, listen, you've done a bunch of single families. Why don't you got a bunch of private money guys that are willing to give you private money directly, not me, not as a private lender, but true private money. Why don't you look at a bigger opportunity, like a 5 through 8 unit? Not a lot of competition. Most licensed realtors don't know how to list one. So if there's one listed on the market, it's probably poorly listed. And it could be an opportunity because the realtor doesn't have that level of experience typically in the residential space to know how to list a 5 through 8 unit. And I said, how many can be in your county right now? He goes, maybe 30. I said, well, go into the MLS, go up to $500,000 and pull every 5 through 8 unit multifamily with no commercial mixed use presence to the building and download them, send them to me. You review them, I review them. We'll pick a couple for you to go take a look at. Because you do that? I said, why not? You're going to do the work. I'm just going to do the review. Because I'm telling you, if you want to scale, and increase a real estate revenue goal plan for yourself. Instead of going for the just a 1 unit, maybe you go for that 4 unit or 5 unit or 6 unit instead of chasing down multiple deals at the same time. Sometimes the Spanish Armada does beat the British Bulldog in our business. If you buy 1 5 unit instead of buying 5 single-family units, it's a lot less work, but maybe a little more, intuitive to understanding a deal. Okay, so developing a concrete plan to increase real estate investor revenue goal strategies, is it's a multifaceted approach. It includes strategic planning, market analysis, and implementation of various factors. One, market research and analysis, identifying emerging trends and opportunities in the real estate market. Analyze local market conditions, including demand, supply, pricing trends, demographics, research comparable properties and their performance to understand competitive positioning and set specific revenue goals. Next, define clear and measurable revenue goals, such as increasing rental income on your properties, property appreciation, or investment returns. Break down the goals into achievable milestones with specific timelines. Diversify the investment portfolio. Next, consider diversifying the investment portfolio by exploring different types of properties. Where maybe the frustration of that 1 unit doesn't make a lot of sense. Look at 2 units through 4 units. Look at 5 units through 10 units. Okay, maybe you look at a mixed use with a storefront and an apartment above or a couple apartments above. Maybe you could turn that commercial space around. Again, very case by case. Now, with that type of lending, expect a lower LTV, and you might have a little more money into a deal, but that return might be better. Evaluate the high growth sectors such as vacation rentals, short-term rentals, or emerging neighborhoods. I'd be very cautious with the short-term rentals, but again, a lot of people are doing very well in certain shore points throughout the country. Optimize property performance. Implement cost-effective strategies to enhance property performance, such as renovation, upgrades, energy efficiency improvements. Focus on maximizing rental income through effective property management, tenant retention, and rent optimization strategies. Exploring financing options. People do not work hard enough in making the tenant is your income producing piece in the pie. If they're not happy, you're going to have problems. So having tenant compliance and happiness, not that you're going to take it on the arm, but what I'm saying is you need to make sure you're taking care of your tenant. Your tenant is paying you your money. Also, evaluate various financing options to optimize capital structure, reduce financing costs, including traditional, private equity, crowd lending, or partnerships. Not a big fan of the crowdfunding part and the partnerships, but you have to recognize them. Refinancing exists to take advantage of lower interest rates or better terms. In the asset-based lending space, you have 30-year fixed, you have 10-year interest only, you have 5 or 7 one-arm. Most traditional lenders only have one option. Hard money doesn't have long-term options. Bridge money is short-term. Leveraging technology solutions to your property, okay? Stay informed to the market trends, to technology, keypad entry, video, lighting. Stay updated with industry best practices and regulations, market dynamics through continuous learning and education. Attend real estate seminars, workshops, networking events to expand knowledge and skills. Monitor progress and adjust strategies. Go to events that are strategic, that are going to impact your bottom line. Identify potential risks and uncertainties that may affect revenue generation, such as economic downturns, regulatory changes, or property market fluctuations. Develop contingency plans and risk mitigation strategies to safeguard investments and minimize potential losses. By implementing these strategies and continuously optimizing your approach based on market dynamics and performance analysis, you can effectively increase real estate investor revenue and achieve your financial goals. Joe, what's your thoughts to some of those points so far this morning?
No, they're good points as always, Joe, right? I mean, you have to pay attention to what's going on in the market around you, right? You have to make sure that you can make adjustments as you need to address the market conditions that you're going to be facing that you just can't predict right now. If you stay flat-footed, any punch that comes to you're bound to be knocked over. So, no, those are excellent points. Not really much more for me to add there.
Well, I'm going to add a couple more things to think about, and then we're going to go to Justin. Okay, so have a goal. The best goals are SMART, SMART. 1 is specific. 2, measurable. 3, attainable. 4, relevant. And 5, time limited. Give yourself a deadline. Justin, good morning and welcome. Brief overview, who you are, what you do, and thoughts to our discussion this morning, developing a concrete plan to increase revenue goals.
Yeah, good morning, Joe. Justin Jefferson. I'm here in the Louisiana area. And I'll just start with a little bit of what I was just reading on, Joe. I sent you something that Courtney Freak just was posting. I knew we had a lot of issues on the market and stuff in Louisiana. But specifically in New Orleans and Baton Rouge, we have a very, very high foreclosure rate going on right now. Now, I think a show or two ago, I mentioned that, Baton Rouge, the price points have not done the most fluctuating or in comparison to the other places in the country. And that's, I do believe that's a big reason why. We're having these issues. I also believe that like I said, the lack in actual value of some of the properties in comparison to some of the places has not held up. I think some of the properties were overvalued during the time, that we were doing the COVID thing, just depending on the front end of COVID or on the middle part of COVID where things were a little heightened in prices. So I think that along with our biggest issue is the insurance thing. So our insurance rates have gone just astronomically through the roof. Baton Rouge's short sale / foreclosure rate is higher than New Orleans, but I say that might be the case because of the value that they have in the properties out there. But unbeknownst to any of that, these are examples of things that are going to be hard changes that you may not be able to necessarily calculate. If you bought a property here, maybe, 5 or 6 years ago, before all of this stuff started to take place and these major shifts and major changes in the laws and regulations, then you may not have been as prepared to underwrite for something like this. Now, if you're familiar with Louisiana, then you know that you need to have flood insurance regardless, right, of where you are in Louisiana. So I think what I just mentioned just has a lot to do with researching and talking to other professionals. This kind of gets real intricate because, like I said, it's one of those things that's tough to safeguard against. But it's I would say this: having the right cash flow and the number of doors is going to be a major aid to helping you kind of fluctuate, right? And be able to maneuver during times like this. So this is just one of the tough situations. I mean, obviously you want to have your concrete plans, you want to have your goals and stuff like that. But I just wanted to speak on some stuff that kind of happens from time to time in different markets. And we're just coming out of a time where things were different, where even on the front end, this would have been kind of tough to underwrite the fact that insurance rates are going to double and almost be like another mortgage for you. So just wanted to throw that.
Yeah, I mean, listen, managing risk is some of it's unforeseen. Like between Louisiana and Florida, I think insurance has quadrupled in the last 24 months. I mean, Florida's a whole nother level of insurance, And I know Louisiana is no different because of flooding issues. I mean, listen, also being an out-of-state landlord in a lower barrier of entry like is Louisiana or Mississippi, they're going to be tougher markets to kind of control. I know a lot of investors in New York that go to Memphis, and let me tell you something. Between all the Tennessee cities, I mean, Memphis is kind of pretty much the lower end. I mean, it's a tougher market. I mean, if you have a good team on the ground, but one of the most important elements of strategizing a real estate investment plan is managing the risk. Risk management involves determining the level of risk one is willing to take when making investment decisions. To manage risk, investors must assess the specific risk, educate themselves on reducing them, and categorize severity of each risk. This can include liquidity, performance, market, and people risk. It's important to remember that there's always a certain level of risk involved in investing, and the potential for reward is tied to the level of risk taken. Therefore, investors must assess and manage their risk tolerance and make informed decisions based on their personal financial goals and circumstances. So if we know insurance is doubling or tripling in a market such as Louisiana, are the rents meeting the debt service of the income and expense ratio? You got to think about that. It might not work. A single family rental might not work. If your insurance is $2,000 a year and your taxes are $3,000 a year, and your rent's only $1,500 a month, and the value's only $120,000, it might not work. You might have to look at a different plan. That might not be your market at all. Okay? Sometimes you got to just cut bait. You can't keep fishing in a pond that doesn't have fish. You can put all the worms in the water all you want. If there's no fish there, then nobody's going to bite. Michael, some additional thoughts to what Justin was discussing and about risk, overhead, the contingency plan, developing that concrete plan to increase revenue goals.
No, I mean, I agree 100% with what everybody's been saying so far. I mean, at this, in this specific market, you got to make sure you do your homework. You got to make sure you have all your ducks in a row. You got to make sure that you have liquidity, ready to go. You want to make sure that you don't overscale with the wrong types of properties. Everyone's pretty much brought very valid information here. I would say though, in regard to the multifamily space, you just want to make sure that you do a good job vetting, especially if it's more than four units. You want to make sure you do a very good job vetting. Whoever the tenants will be. That's a lot of people in close quarters, so you want to make sure that it's going to be a good fit and not just a quick money grab, because tensions can grow quickly in those types of situations. So just want to make sure that you're doing a good job vetting, and then you're not going to have any issues by taking on more units in that situation.
And that ties into getting the right education, surrounding yourself with like-minded individuals. If you're going to buy something like a 5 through 10 unit, you want to hang out with other people that own 5 through 10 units, right? So you have to build that solid foundation, like what Michael's saying, for whatever real estate endeavor you're taking on. There's so much to learn working in new fields, right? You got to be eager to learn. Don't wait for somebody to train you, and go out there and find that training and that accessibility of education. Okay? Because picking people's brains only goes so far, but then you need people that you're gonna compensate to educate yourself. I always feel people want to try to get their advice on Facebook by posting, "Hey, I need CPA advice." You're not going to get CPA advice on Facebook. Oh, I need legal advice on an eviction. You're really not going to get good eviction advice on Facebook putting that up as a post. Hire a professional in the field. Spend money. Okay? There's no shortcut in success in building the concrete plan of increasing revenue streams. Like I sat down with somebody yesterday and talked about building revenue streams. And I decided I didn't need to have any form of partnership in any of the revenue streams that I'm involved with. Okay. And I'm going to move a couple things around on Monday, Tuesday, based on a breakfast meeting I had on Friday. And guess what? I'm going to add another revenue stream box to my repertoire. Okay. Because I don't need a partnership with it. I just rather just do it myself. Not that I'm being greedy. It's just, some people in your world are dead weight, and you got to kind of figure out which ones are. Some people are anvils in your world, and then some people are lifting. Okay, you need to pick which ones are lifting and which ones are your anvils to create that plan. Or you got to recreate who you're working with and who you're surrounding with yourself with. Are you surrounding yourself with the right people in creating these revenue goals and plans and strategies? Have you thought about that? Think about the last 5 people you sat down with. Are you making money together? Are you going to make money in the future? Are you making money in the present? Have you made money in the past together? Maybe there's just some people you don't need to work with. Maybe just fire them emotionally and mindset wise and just take them out of your world. Like I went to a networking event Thursday night, and I went up to a couple of people that I had saw at a previous event. And I'm like, hey, how's everything going? Oh, we're working with this individual for lending and blah, blah, blah. And that's fine. I mean, there's a lot of fish out there in the pond, no problem. Oh, that sounds great. Congratulations. Oh, yeah, we're looking at terms of this and this. And I think they were trying to bait me to see if I was going to say something. I said, no, that's great. Best of luck. Good luck and much success. Hope everything goes well. And I excused myself and I went to talk to somebody else. I left them hanging. They were expecting me to do a hard sell. Listen, a true professional doesn't need to hard sell themselves. A true professional in creating a revenue provides, gives, and then knows when they got to walk away. Okay? So you got to surround yourself with the right people. And you also have to put a daily schedule together and a weekly schedule and a monthly schedule. Like, do you have a calendar that's out 30 days? Do you know where you're going to be networking and meeting with people in the next 30 days? Do you have a calendar book? Do you have a Google Calendar? What do you have that knows what that schedule looks like? Developing discipline, building routines, and eventually automating the whole process truly creates success. If you follow your plan and your goal, it will be achieved. So if you're looking to develop a plan and you want to be a real estate agent, right? You want to be a licensed real estate agent. Real estate agents do not realize how many revenue stream opportunities they have in their space. They really do not realize how many opportunities they are, how many layers there are as being a licensed real estate agent. Because when they go to an office, the broker limits them because the broker wants to make all that money off of you. Okay? I'm starting to see in some of these different flagged real estate companies that don't have a physical office, the layers are starting to peel off, where a lot of real estate agents are realizing the additional revenue streams that they have been given, kicking back up to their broker. There's so many opportunities in this market. You could stay busy in so many various lanes as a licensed real estate professional. I mean, I can tell you right now, I have 1, 2, 3, 4, 5 revenue streams as a lender outside my real estate holdings and outside my lending. Checks come in here, there, from different directions. No, I don't teach anything. I don't mentor anybody. I don't take money for education that I provide. We are the only clubhouse room that has a podcast that provides complimentary video marketing tools to their people, their engaged listeners and professionals that we surround ourselves with. We're the only group that provides complimentary worksheets to educate yourself as a lender, as a realtor, as a real estate professional. And we're also the only podcast clubhouse room that provides a CE accredited course to teach you how to be a lender, how to be a better investor, be a better real estate agent, and understanding and navigating asset-based lending. It's a 3-credit CE course approved by NAR, and it's allowed to be taught in any state in the country. There's not another group that offers any of that. And we're not putting any price tag to it. You just have to stay engaged, follow up, follow through, be part of the process. I'm not a big believer pay to play. There's 10 times more money made in education than actual physical real estate transactions every day. Joe, some additional thoughts to our discussion this morning, developing a concrete plan to increase revenue goals. Joe, you there?
No, you hit it right on the head. Yeah, I'm here. Sorry.
Yeah.
You hit it right on the head, right? You have to have a good plan. You have to have your goals set. You have to be able to do your numbers, right? And that's what the constant theme in this room has always been, right? Know what's going on around you. Know what's going on in the market, right? Rent to the right people. Learn how to do your vetting. Don't just sit back and pretend that it's all just going to happen, right? So, yeah, we're in a buyer's market, right? Maybe switching over to a seller's market. It's kind of interesting how the economy is going to go. We're in an election year. The interest rates, where everybody was telling you, all the quote unquote experts were telling you, date the rate, marry the house, and that all turned out to be bad advice. Again, that was all stuff that was readily available in the mainstream media. So if you're relying on mainstream media to help you build your goals and build your enterprise or your portfolio or your empire or whatever you want to call it, or guide you in your investing, well then you're really not learning anything, right? The way you learn things is building those relationships, going to the real estate investors associations, going to the podcasts like this every week. Part of the reason why I do this, right, is to help people, right? But it also helps me. It helps me staying responsible to stay up to date with what's going on in the real estate market, so I could share this information with the folks in the audience and share where to get it to help people succeed. Again, Joe, we're not selling anything. We're not charging anybody anything. But there are individuals out there that are selling courses for thousands of dollars, if not tens of thousands of dollars, just to give this basic information that is provided for free. So there definitely is value here, right? And listen, I don't hold any punches, and anybody asks any questions, I give them the God's honest answer, right? Whether it's here on stage and on replays, or it's someone reaches out to me in the back channels. There's really nothing to hide, right? I've been through the ups and downs. I've had my failures and successes, and I'm willful to share about both. A lot of people just talk about their successes, but they never talk about the failures. And if someone tells you that they never failed, it's a complete lie. We've all failed at one point or another, and that's how we learned. And if someone is starting out and they still haven't failed, be very, very cautious taking advice from them, because they really haven't earned their battle scars. And that's just what I got for you. But yeah, keep mindful of the market. Always know what's going on. Put your feelers out there into, just constantly monitor, whether it's realtor.com, Zillow, the MLS, what's going on for rent. How long is it sitting on there if you're a rental guy or gal, or if you're a buy, fix and flip. Pay attention to what's going on in the market. Watch the houses that are coming on. How fast are they coming off? Are they reducing their costs? What are they sitting on the market for? What's the areas look like? Don't just say, oh, this is a house in this area and the ARV is this. No, start looking at what the houses are actually doing on the market, and paying attention to that. So that's all I have for you, Joe.
Thanks, Joe. And that ties into my next thought. SWOT analysis. SWOT. It means for strengths, weaknesses, opportunities, and threats. Conducting a SWOT analysis means stepping back from a day-to-day business to assess your broader position and path from strategic lens. Internal strengths for your real estate investment business may include an experienced team skilled in major rehab projects, strong contractor relationships, or access to private lending capital. Weaknesses might be limited to staff for handling tenant maintenance issues across a growing rental portfolio or having a small number of referral partners for deal flow. External opportunities can come from accelerating population growth and development in your target market, new zoning favorable in multifamily housing, or record low mortgage interest rates. Threats could be rising material prices that hurt your flip margins, law imposing restrictions on non-primary residence owners, or an oversupply of new luxury rentals allows tenants to be choosy. The SWOT analysis highlights strengths to double down and risks to mitigate in the real estate market. So, Joe, you gave me a thought about something. I have offered hundreds of people to learn how to be a loan officer in the private lending space, providing them a pricing sizer so they could price a deal out and they could benefit by making an origination fee off of it. Do you know how many people have submitted loans to me, Joe?
0.
2.
Oh, better than 0.
Correct. Okay, there's such a massive opportunity of understanding how to analyze a deal. People just don't realize, and I'm going to pick on Michael because I picked on Michael about 4 or 5 years ago to learn how to price size out deals. Michael, what's your thoughts on the pricing size and where there's money to be made in the investment space?
There's tons of it. I know everyone like we've heard, many people say, "Oh my God, there's no deals in this market." But I talk to people all the time. Some people doing 5 deals at a time, doing 10 deals at a time. Maybe I'm helping them get, the unsecured lines of revolving business credit. Maybe we're discussing, some hard money options. But being able to work a sizer is actually going to help you in your own mind kind of determine, exactly where you need to be numbers wise. The sizer is going to tell you DNQ, and that says do not qualify. And that's telling you that your ratios aren't going to work out. And if it's not working out in that sizer, that means that it's definitely not going to work out for you in, making money or how the deal structure is going to work. So it's extremely important to be able to understand from the lending perspective how to structure the deal. And then again, on Joe Martello's point, you want to make sure you're out there, you're looking at the markets, you're seeing what's happening. You want to make sure you understand your own scope of work when going into a property, so that you have all the pieces put together, so you have a better picture of really what you're trying to accomplish.
I think, Mike, I think people get lost in the sauce thinking they have to learn from a self-proclaimed real estate expert in understanding the market. I think people don't realize they need to understand the financing first. It's the complete backbone to what the entire real estate industry. If you don't understand the financing piece of the pie, you will fail. You can learn all about all these things: short sales, novations, fix and flips, fix to rents. At the end of the day, everybody needs financing. Everybody. Everybody needs money. Everybody needs reserves. Everybody needs to understand debt service coverage ratio. Everybody needs to understand cash flow projections, funding requirements, profit and loss forecasts, location. That all ties it, because I'm also, as a lender, I'm going to look at the location where you're buying the property. I'm going to look at the appraisal. When's the last time one of you have sat down and had a cup of coffee with an appraiser? Justin, good morning. A little more feedback from you in regards to developing a concrete plan to increase revenue goals.
Yeah, man. That point you were talking about with the appraisers, I think that's a good idea. That was an excellent idea. Between lenders and appraisers, where lenders are constantly seeing the value that they're allowed to lend on, and based on what the appraiser comes back with, and also the appraiser, I think, really, just like we go get our continuing education as agents and contractors and lenders and so on and so forth, they go get their continuing education. And also they have sort of a natural continuing education. The advantage I believe they have over realtors is they see just slightly before them, but they can pick up on a trend of a price increase, decrease, changes in the market kind of before they happen. Sometimes if they're a good appraiser, and you got to be careful because when we're asking you to look for this level of expertise from an appraiser, obviously any and every appraiser is not going to be this into their profession. Some of them just do their job and go home, don't worry about it. But you definitely need to go to the places where there are appraisers who are looking to work with investors, willing to work with investors and other people in your industry, and have an interest in staying abreast on what's going on. So once you find him or her, right, you definitely want to keep those two. And I say the lenders because they're going to let you know how you can play your game. But like I say, I always recommend to play it safe. I mentioned a couple things over the past months. I mentioned, you know, some appraisals that came back, or some, right, that for some properties down here, and I believe they were significantly overvalued. The bank overvalued them, in my opinion, right, knowing the area. And here we are today. I'm looking at Baton Rouge and New Orleans neck and neck with, you know, just compared to the rest of the country, a significant amount of foreclosures, and they're coming for a multitude of reasons. And like I said, in Baton Rouge, it's happening because our value for the property just has not increased that much. We have a lot of land we can develop on down here, and we also have, you know, the price point that people can afford. Affordability has remained in a certain range. So you got that coupled with increased carrying expenses, and that's created some turbulence. So just a couple of things, man.
Yeah, and you know, and I'm gonna pivot back to revenue goals. You know, as a real estate professional, if you can't afford to buy a house right now, and I get it, okay, I really do, I really do understand it. If you can't afford to buy a property right now, there's other opportunities within the industry where you could be a referral partner. You could be a referral partner in regards to insurance, whether it's title, property and casualty, lending. There's multiple layers in the lending space to create revenue stream. This is as a licensed realtor, and you don't have to disclose. You're just being a referral partner. So developing that concrete plan to keep the lights on and being a real estate professional is extremely important in this space right now. Okay. And your investment strategy outlines your niche. You know, whether you're going to focus on flipping, buying rentals, you know, developing, define your targets, like certain cities or zip codes, backed by your research on growth potential. Specify your criteria for ideal investment properties based on goals. Decide which factors, age, size, layout, condition, or price point, matter most to you. You can also use different ways how to find deals, whether it's scouting listed properties, attending foreclosure auctions, networking to create off-market opportunities. I mean, listen, I went to 4 different events this past week. I was in Newark, New Jersey on Monday. Tuesday, I was in Connecticut. Wednesday, I was in Long Island. Thursday, I was in Pottstown, Pennsylvania. Friday, I was in the South Jersey market, meeting different people, getting different perspectives, getting to understand what their why was, okay, and what's not happening for them, and matching up new opportunities, being a connector. Good morning, Courtney. Welcome. Brief overview of who you are, what you do, and thoughts to developing a concrete plan to increase revenue goals.
Yeah, good morning, everyone. Courtney Fricky here, based out of New Orleans, and primarily a buy and hold investor. And this is so critical because my first mistake that I made when I was buying rentals, and I generally buy them with with creative financing. And so these are, yes, they're low to no money down situations, but it takes money to keep rentals, right? So whether a tenant doesn't pay or there's repairs or stuff like that, it's important to have capital to make those payments, to make those repairs, so that you can keep what you acquired, right? And so I do deals. So this is something that's important. I do deals not because I want to keep the property, but I do deals as a means to an end. Some of you guys on Thursday heard me share in a room a deal that I did last week where it was 14 units in a town that I didn't want to own. But I did the deal, bought them, sold one of them for cash, which gave me the other one free and clear, and then I sold that one on financing. And by selling it on financing, I got more if I just wholesaled it for cash. But I also got monthly income, and by doing that deal, that monthly income is putting money into my my rental entity every month, and that can go towards reserves. That could make up. Right now we have an insurance crisis, so some of our cash flow is low. So right now, again, I'm doing deals to put a little bit of extra cash in the bank. And so I used to be very picky with deals, meaning oh, well, I don't like that property, so I'm not going to do that deal. But as my deal making got stronger, I started doing deals as a means to an end. Like, those deals are ways that I, pay toward my reserves and things like that. And it's not necessarily a keeper property, one that I want to, own forever. So that's just a thought. Just know that, there's ways that you could do stuff as a deal maker that can help with your revenue goals. And so, but yeah, those are some thoughts that I have. And those are some of the ways that I help with my own revenue issues as an investor.
Thank you, Courtney. That ties into what wholesalers are doing today. Wholesalers, a very savvy wholesaler right now, keeps some ones for themselves and then puts ones out to the farm, the buyers, to keep money coming in and going out. Okay, they're building wealth and they're creating revenue all at the same time. They typically have a relationship with a lender. They typically have a relationship with a title company. They typically have a relationship with a property and casualty rep, where they're making referral partnership programs with every one of them. Why haven't you done that? You got to ramp up your marketing efforts. Service level relationships are not enough to ensure that your network will contact you when you're ready to buy or sell. Okay? You have to go deeper as a real estate professional to network with people. Okay? By deepening your relationships, you'll become top of mind with those people when they have a real estate question or need. Take social media, for example, right? Building followers means that you're showing that in your feeds regularly. Okay? I was on a call on Thursday with a group of referral partners. And they're like, hey, Joe, how are you number one as a referral partner for this program every month? Why? Because every day I take it very seriously. I post inspiration, education, motivation every single day, 3 to 4 posts a day. 7 days a week, I have somebody posting content on my behalf in all my social media buckets. I'm very consistent with it. Okay? Consistency and continuity is the biggest piece of the concrete to increase your revenue goals. Set yourself up to be successful by surrounding yourself with successful people. Not ones that are claiming it online. I want to meet you in person. You want to email me for the opportunity for me to refer you or introduce you to somebody? I want to sit down with you and have a cup of coffee. You want to ask me a question via Facebook Messenger? I want to talk to you on the phone. I don't know you. I want to get to know you. I rather talk to people that want to talk with me, and the people that don't want to give me a call after they Facebook message and tell me their whole life story. I don't want to deal with that type of person. I want somebody to talk to me on the phone. I want really good communication, because when things go bad or good, I want to be part of both. I want to be part of both of those opportunities. That's the difference. I'm not going to teach you something and then never talk to you again. I want to be part of the fabric. You want to be part of the fabric in building a concrete plan for others, where it's going to create increased revenue goals for yourself. That's the game plan. That's the whole ball of wax. Setting yourself up to not follow what's going on in the media, people's opinions. You know what opinions are like. Everybody has one, right? Focus on your brand. Focus on your personal development. Focus on your health. And focus on building revenue stream opportunities for yourself as a real estate professional, whether you're a licensed real estate agent, a licensed real estate professional, a referral partner in the unsecured business line of credit, you're a lender, you're an insurance agent, you're a title agent. You should have multiple streams of income working in your industry. It's the only industry that has it. It's the most non-integrous and integrous industry in the world, real estate. But there is so much opportunity. There's people that have there's more millionaires made in real estate than any other industry ever, and will continue to do so. Joseph, your final thoughts to developing a concrete plan to increase revenue goals. Joseph?
Yeah. Yeah, no, listen, exactly what you said is correct, right? It's building those relationships, it's having that cup of coffee, it's taking the time out to invest. I mean, in who you're getting to do business with, in addition to monitoring the market, right? I mean, what you didn't articulate, right? The reason why you want to have a cup of coffee with them, it's right. It's not to sit there and waste time and having a cup of coffee, but at the end of the day, if you're making a referral, if you refer me to somebody, your reputation's leaning on it, right? So, and then if something goes sideways, I'm going to call you and say, Joe, who'd you send me to, right? So, no, it's absolutely important, and anybody who is looking to refer somebody to recommend someone for services needs to be taking the same approach, right? Your reputation, you're only as good as your reputation, especially in this business. And if you're sending me to a knucklehead, well, then what does that say about you? If you're not doing your research, your homework on people that you're referring me to, and you're getting me kind of screwed up and jammed up, well, there's a bigger problem there. So, Joe, you're 100% right with, hey, you're not just hitting me up on Facebook or a text message. I need to look you in the eye. I need to learn who you are and why it's beneficial for me to establish a relationship with you. And if you are going to operate with integrity, right? Integrity is key. If your reputation is mush, then you know you're not really going to go far. You might go far quickly, but then the house of cards will fall down. But you're 100% right, Joe.
Thank you, Joseph. Justin, your outro and our discussion to developing a concrete plan to increase revenue goals.
Yeah, I think it, just kind of based on everything we've talked about, it goes without saying, just gather your team of professionals and make sure, they're staying abreast and you are, as well as to the market shifts and changes, and move accordingly so you don't, end up over your head. Thanks.
Thank you, Justin. Michael, your brief outro in regards to developing a concrete plan to increase revenue goals.
Yeah, well, honestly, I'm just going to touch base on a horror story that I heard at a networking event recently, that a subgroup that I run. It was a new investor, didn't really know much, didn't really get too much information on how the process works. But he reached out to a wholesaler asking, for a list of lenders, and the wholesaler just found a list of hard money lenders online and sent it to him. He was talking to one of those lenders when he came across a property And the lender said, send me 10 grand and I'll make sure I put it down for you on the earnest money deposit. This guy sent him 10 grand and the lender just disappeared off the face of the earth after receiving that money. He didn't realize that you never send money right to a lender. You always send it to a title company. And now he's suing that wholesaler that sent him that list of lenders. So it is very important to make sure that you're not just randomly sending people as referrals out there. And it's also important to make sure that you're doing your due diligence and you understand the process, or you're going to end up having somebody scam you out of a ton of money. So it's very important to make sure you're coming to places like this and you're learning. So I appreciate the time, Joe. Thank you.
Thank you, Michael. And that does sound like a horror story. So, my final thoughts to our discussion in building a concrete plan and increasing revenue goals is the power team. Surrounding yourself with integrous individuals, sitting down with people and seeing how they tick, whether it's via Zoom, via coffee at Starbucks, via breakfast, a luncheon, a dinner. If somebody's willing to travel to meet with you, I travel quite often to meet with different people. Doing what I say and saying what I do is very important. If I'm going to meet with you, I'm going to meet with you. If I'm going to get on a call with you, I'm going to get on a call with you. Communication is still very important in our space. That's part of the concrete plan. And then understanding how to make revenue streams in the business. Most people are not educated in revenue streams. And you only find them kind of by coincidence, okay? But there's nothing wrong making a referral or making a referral program with different groups as long as they're being honest and they're doing their job. I want to thank our sponsors today. As always, Perkatech with Yardell Perkins, our social media strategist, our odds behind the drape. Realty 411 with Linda Pelagas, a national publication for real estate professionals throughout the country, providing also national speaker events throughout the country as well. Lenmark Capital, your asset-based lender, nationwide licensed in the asset-based lending space. And MB Capital, your unsecured business line of credit referral program. I want to thank everybody for your engagement. I always want to thank our moderators for providing insight and their thoughts to our discussion. None of this is scripted. Okay. Also, I offer everybody worksheets to understand how to pencil your deals down better. I also offer a referral program in the lending space through Lenmark, through me, as a referral partner. We also offer a CE course for any licensed real estate investor groups or REIA groups or associations in providing 3 credit CE for licensed real estate agents in every state in the country. We'll be back here tomorrow morning at 9:30. We're here every Saturday morning, 8 a.m., every Sunday morning, 9:30 a.m., providing insight, strategy, and education. And my quote this morning is plans is private. Moves are silent. Life is low key. And prayers are loud. Everybody have a blessed Saturday morning. Please take care of yourself. And we'll be ending the room in the next 30 seconds.